Yo, what's really good, people? Welcome back to the channel. In today's video, episode 62, we're going to talk about the top movers and fallers. As always, we're going to talk about Trump versus social media, and I'm going to touch on the free trade stocks that have been issued this week, and some of them that's on my current watch list, but I'll definitely do a deeper video also about one dividend payment that I've received this week. But you know what? I'm going to just get this right out of the bat. This has probably arguably been one of the most difficult weeks to analyze, stock performance. For those of you that are new to the channel, what I try to do is not just say, oh, you know what, I'm up 20%, I'm down 20% without giving any context. I try as much as possible to understand why a stock has risen or fallen in the current week, and try and look at the news surrounding that stock and come up with a fair and reasonable judgment as to why the performance has been the way it's been, because I do think there's always going to be a reason. That's my personal take on it. But this week has been pretty difficult because we've got the whole backdrop of the COVID situation, which, although in some markets there is talks of loosening up some of the restrictions and people getting back to an element of normality, but at the same time you still got rising numbers of fatalities, which is naturally going to affect many businesses. You've got loads of stocks that have been currently depressed that some people are seeing as buying opportunities and dumping a whole bunch of money into it, so it's kind of confusing the reason why the stock is rising or falling. You've got stocks rallying. Some have had unprecedented rallies. You've seen that in some of my stocks over the past couple of months, and some of them are actually starting to sell off, even though they've done well on earnings and so forth. You've still got earnings as well being released for multiple stocks, which is naturally going to affect price movements. You've got the whole recovery situation. Are we a U-shaped recovery, V-shaped recovery, W-shaped recovery, LMN, P-shape, whatever shape people want to come out with these days? That is obviously something that's continuously being talked about, and I think that also varies depending on sector, depending on whether it's a housing, whether it's finance, whether it's tech, whether it's US, whether it's UK. So that's having a big impact. You've got the talks of recession, and a lot of the countries in the Eurozone that are failing their GDP numbers. You've got global trade implications, so this stuff about Hong Kong and China and all of the sanctions and the stuff that's going on over there, and how that's potentially going to impact worldwide. Also the fact that if we fight, or I'm not part of this, but if Trump or the US or the West try and impose sanctions on China to pay for the COVID situation, then they're going to respond in kind. So that's sent stocks moving in different directions. Literally, it's just been a melee of different things. And so I always try and encourage you guys to try and find out what the reasons are. I think that's only really applicable if you are an active investor, that you're buying individual stocks and you care about that type of thing. If you're a passive investor and you're just buying into an ETF or your dollar cost averaging, regardless if it goes up or down, then you've got peace of mind that you don't have to worry about all of this stuff. But yeah, it's been a very, very interesting week, so I'm definitely going to get into it. But if you want to know more, like, comment, subscribe, help the channel get to 6k subscribers. I think I'm like 19 away, so yeah, if there's 19 of you out there watching this, then I'll be much obliged if you do subscribe. Instagram at Infinite Investors, and if you are wondering what app I'm using the Freetrade application. My link is in the description and pinned comment, freetrade.io/infant-investors. If you click on the link, sign up, deposit £1, you will get a free share of up to £200. But let's get straight into the top movers. You can see I'm on the basic side, and you can see it's gone up this week, which is really positive. And the first one I'm going to talk about is Landsec. So Landsec has gone up 11.32% for me this week, which is really good. I'm going to start with the bad news because, like I said, it's been a very topsy-turvy week. So Landsec has announced that they've pretty much had about a 1.2 billion hit in revenues due to the whole COVID situation. So because obviously they own a lot of retail outlets, and because those retail outlets don't have footfall, and because people aren't paying their rent, because they're not generating money, then that's obviously had an impact to Landsec, which obviously owns those outlets. They've also then scrapped their dividend. So Landsec actually hadn't scrapped their dividend this year prior. I think they still had one pending. They did scrap, I think, the next dividend payment, but they still had the following one, I think was around October, scheduled. That's gone. That October one's disappeared as well now. So they scrapped their dividend for 2020, which is obviously going to have a negative impact to, you know, potential retail investors that rely on those dividends as well. But one of the reasons why I think it's actually gone up, you know, in the midst of that bad news is twofold. The first is the fact that the Landsec CEO he's a newly minted CEO, I might add. He has just literally put £150,000 worth of investment into, you know, Landsec stock. So that for me is like a big vote of confidence. Obviously Landsec was at a 12-month low. He's bought in, and he obviously is showing that he potentially believes in the long run it's going to come back. Now, if it was a CEO that's been there for 4 or 5 years, I probably would have a bit of a different take. But if he's just joined the company, he's not going to be leaving until at least a 3-year term. So he's probably thinking, you know what, it's at a 52-week low. I'm going to turn this business around. I'm confident in what I'm going to do once the pandemic situation resolves itself. So I'm going to be buying at these low prices, and I'm going to make a fortune in a year or two's time. So, you know, I think that's one of the reasons why obviously the share price has gone in the right direction, and maybe a lot of people have, you know, followed suit in that way. I also think the second reason is that because it's the 52-week low, generally a lot of investors look at 52-week highs and 52-week lows as sort of benchmarks of when to invest within a specific stock. It's not science. It's not to say that that is, you know, the way to invest, but it's just it's one of many metrics that investors typically use. So because of that, I think that's also had a positive impact. There's also been slight talk of a recovery in the UK market potentially, so that's potentially had an impact, but I don't think it's been strong enough to really have warranted it. So that's my theory. Obviously there could be a whole bunch of other reasons. If you know of any other, definitely get in the comments. The next one to talk about, I'm going to move over to the ISA, is Virgin Moolah. Now I'm just waiting for it to load, but I'm going to carry on. So Virgin Moolah has gone up 13.55%. It actually went up quite significantly this week. I got a couple DMs like, look at Virgin Moolah. So you can see overall it ended at 13.55%, but there was points where it went up 27% this week, which is obviously a significant rise, but it did tail off towards the end of the week. One of the reasons why I think Virgin Moolah has gone up so significantly this week is slightly that announcement of, you know, a slight, you know, recovery, U-shape, V-shape, P-shape, LMNO, G-shape, whatever. All of them shape recoveries has been partly to announce. I think also out of all of the UK banks, Virgin Money seem to have quite a high quality loan book, and loans is how they potentially make their money. It was extremely undervalued if you think about how much it dropped over the course of the year. Like, you know, Virgin Money was at I was buying Virgin Money at £2.5 a share, sorry. So, you know, you can see it going to 58p, etc. is a significant drop, and I think people are seeing that maybe now's the time to potentially buy in going into the future. I'm going to leave an article in the description, but it also talks about how there's been a lack of exposure with Virgin Money to COVID-related business sectors. So actually, although it's dropped, and although it overall as a business has had a negative impact primarily due to COVID, and it's had to put some money aside for payment breaks and all this other stuff, generally speaking, the business is a company that should be able to weather it, which is the way that they're feeling. There's also been some price targets, and one of which is UBS, which basically feels that this year Virgin Money is going to become a stock at £1.70, so 170 pence for the share. So that would basically be, from where it is today, about 117% price rise. So I think due to a lot of those factors, I think that's one of the reasons why Virgin Money has gone up this week. It's definitely going to be interesting to see what happens next week, if it was just kind of a flash in the pan thing this week, or if actually there's going to be more sustained rallies. But the UK banks generally as a whole went up this week. So I've seen rises in Lloyds, not as much as this obviously, but I've seen, you know, One Savings Bank has risen, RBS has risen, Barclays has risen. So I think if most of you guys do have any UK banks, then you've probably seen that rise as well. I'm going to flip back over to the basic side one last time for the highest mover this week, and that is British Land. So British Land this week has gone up 17.04%. Now, one of the key reasons why British Land has gone up so much this week is because there's been an investment giant from Canada called Brookfield Asset Management. And this week they've gone and bought 7.3% of British Land. So they've basically put a very big stake into British Land, which is, I can't remember the figure now, but it was like 250 million or something significant. It was a significant amount. It was in the millions, obviously. And so I think that's had a natural impact. Generally, when there's big purchases like that, that's going to obviously move the stock price in a specific direction, and people will probably follow suit off the back of that as well. Now, similar to Landsec, it obviously owns land, it owns retail outlets, and it's one that's obviously had a bit of a negative impact over the course of the last year due to the COVID situation, and just generally speaking as well, it's not been that great. This is one that I'm currently actively averaging down. So you can see recently that I've done quite a few recent purchases from 3rd of March, 27th of May, 28th of May, and one I'm going to continue to do so because British Land is one that I'm looking to sell. I did mention in the video that I talked about UK stocks are dead, etc., and I think I was definitely misinterpreted. I will be holding probably 5 to 6 UK stocks. I definitely need to reduce all of my stocks overall, and where I'm going to be targeting stocks is mainly the UK ones. So one of the ones that's definitely on my list to fall effectively, to come out basically, is British Land. And one of the reasons for that is that I feel the retail store landscape is definitely changing. So when it comes to REITs, when I did the REITs video quite a while back, one thing that we saw is that warehousing and healthcare REITs was doing pretty well. And I think that's now going to be even more pertinent during this COVID situation, where people are actually going to be shopping online more than obviously shopping in retail branches. So I think this retail store thing is actually a curve and a trend that's not just going to basically shut down. If tomorrow they said COVID-19 is over, there's no such thing, it's gone, be safe, walk out, be merry, enjoy yourself, I don't think people are still going to jump back into the shops like that anyway. I think behavior has naturally changed, and I think this is going to continue into a certain trend. So I'm actually looking at it more broadly, that COVID has probably just realized what behaviors people are going to exhibit in the long term, and it's just kind of expedited that and bring that forward a little bit. And warehousing REITs will then become a lot more important because people will be actually buying things online, and obviously if you are an online wholesaler, you do need warehousing space in order to hold those goods and services. I think healthcare REITs as well is going to be really important just because of the whole health nature and aspect of this situation. So I would say in terms of category of REIT, I don't feel that British Land is probably going to give me as much as some of those others potentially could. But anyway, I won't be replacing this for one of those other REITs. It's just for me to kind of give you that information. I think I will just sell this, and this will probably go into some of the existing stocks that I might currently hold, or maybe a new US tech stock or something that I actually want to be buying for the long term. So it's going to be interesting. Also, they're not doing any yields this year, so really and truly averaging down for me. I'm not going to be making any real money apart from trying to close off the capital gain. So that's going to basically be my focus for one of the stocks. For one of the stocks that I'm going to be averaging down and trying to reduce my holdings by the end of the year. So yeah, the next stock is now top fallers. So the first top faller to speak of is Imperial Brands. So Imperial Brands this week has gone down 3.01%. We talked about it last week. They did a 33% dividend cut. They're a quarterly dividend payer, so their dividend amount has basically dropped by 33%. There's been a few talks out there that this is potentially on the horizon, that there's going to be more dividend cuts for this year. So I think that's had a bit of a negative impact, and I think they've just got a bit of an uncertain business right now. They are selling off bits of their business in order to reduce their debt, but simultaneously I think the impact of COVID has probably had a bit of a estranged impact to their current performance at the moment. So it's going to be interesting to see what's happened. We've seen in their last earnings that they're actually selling a lot more during this current time, and I think if you go to a recession, that's going to increase. However, their margins, their profitable margins, their bottom line has reduced. So they're selling more, but they're making less money. So I think they're just going through a lot of changes currently right now, but I don't see 3% as a significant or a meaningful drop, in the grand scheme of things. But yeah, that's basically what I've kind of deduced from that. The next biggest faller is Centamin. So Centamin has dropped 7.46%. Centamin had a great earnings update. The amount of gold production they've done has been fantastic. Their earnings, their profit, their revenues has all been on the up and up. So I basically believe that this is just a slight correction when you look at, how well the performance has been over the last month and how well the performance has been over the last year, and obviously how well the performance has been, overall. So I think this is a slight correction. Again, I'm not really worried. I also think because of the correlation between gold and equities in the UK specifically, and particularly when finance and housing stocks are doing well, you find that gold tends to have the inverse reaction. So when finance stocks are doing bad, gold tends to go up. When finance stocks are doing good, gold tends to kind of go down a little bit. And so I think because there's been a uplift in some of those REITs, as I mentioned, and obviously a lot of the banking and finance stocks, I think that's had an impact to the share price of gold, probably overall, which I don't hold, but Centamin, which kind of mirrors that, as well as having its own fundamentals. So it's been a bit of a drop, but it's definitely one of the UK stocks that I will most definitely continue to hold. I've had it since the very beginning, and it's a stock that I like holding, and I will continue to do so. The last stock that has fallen has been Almighty, have fallen Shopify. Shopify's got down 8.16%. And listen, I love Shopify. Like I'm in awe of this business. I think it's run by an incredible CEO, and I think a lot of the stuff that we've mentioned over the last few weeks, their earnings, their opening their banking platform, their buy now, play later, their COVID-proof business. They're one of the businesses that proven that this there is a change in the market. There is a shift in behaviors in the market. They've now become Canada's most valuable company. And they've had a meteoric rise over the last month and over the last year, to be fair. So 177.91% over the last year. So me personally, this little 8.16, we're not fretting about that. I think that's just a little minor correction, and it might drop again next week, but we shall see what happens. I think every week is telling us a new story, but yeah, I think this is a minor correction in the grand scheme of things. So yeah, I'm not too worried about it. But overall my portfolio this week has gone up marginally. So I think by a few £100 it's overall gone up, but you can see that it's kind of, this picture is a bit, it kind of represents the market this week, how crazy this market has been in terms of how much it's gone up and how much it's gone down. But I think due to some of the stocks within my basic account doing well, and me averaging down some of those stocks. So the benefit of me averaging down some of those stocks as well is that I'm not actually using any of my money, which is great. I've been averaging it down with all of the free shares that I've basically earned from Freetrade. So I basically sold all of my free shares on Freetrade this week, and then I used that money to average down Landsec and British Land. So literally the money that I invested was a decent amount. Let me not get into figures. It was a decent amount, and yeah, that basically means that my performance is not actually really representative of how much I've invested from my own hard-earned money, but just money that I've basically accumulated. You could maybe say that I've earned the money because I do these videos or whatnot, but I kind of see it differently. But overall, the performance has been good this week, and it's compounded by the fact that all of the money that I've invested this week is not been from my own salary and whatnot. Now, the next thing I wanted to talk about is Trump versus social media. So your boy has been at it again. He's been, I was about to type in Trump. Can you type in Trump? What happens? Nothing. Your boy's been at it again. He's putting pen to paper and signing executive orders, etc. This time it's against social media, triggered by the fact that his post was being fact checked. So he made a post about male voting or something along those lines. Male is in MAIL, not male is in man voting. And Twitter felt it was incorrect, so they fact checked his tweets. And he basically is threatened to block them within the US. Whether he has power or the ability to do that remains to be seen, but block them if they continue to suppress, to edit, to blacklist any kind of editorial decisions or things that he chooses to say. So that's had a negative impact. I want to kind of not talk just about the politics side of it, but more about its impact on the stock market. So you can see that Twitter this week has gone down 5.06%, and I think that's directly correlated with this situation. And also we've seen that Facebook has gone down 4.18%. Now, can I be controversial? Would you guys allow me to be controversial on this? I actually agree with Trump. I fully agree with Trump. I personally believe, and again, everyone's going to have their own different philosophies, and I respect everyone's opinions, but this is just my personal opinion. I believe everyone should be able to say whatever the heck they want on social media with no repercussions. I know that sounds crazy. I know that means that people can go and do, say things that are incorrect, can spread lies, spread rumors, spread whatever, but to be honest, I don't think it's the place of social media to be muting people's voices and to be, blocking people. Like, there's examples where, people like David Icke or Alex Clark. Is it Alex Clark? Yeah. Like, they're, quote unquote conspiracy theorists, and I put that in inverted commas, and they're exposing, the bourgeoisie and the elite and, the highest ranking people in government for things that they're doing, things related to, very, very dark subjects I'm not even going to mention on this video, and they get blocked. So I just feel like if David Icke can get blocked and Alex Clark can get blocked, or Alex Thomas, is it Alex Clark? Alex Thomas, one of the guys, I think his name's Alex Thomas actually. If them guys can get blocked, there's been other activists and people that are fighting for causes that maybe again don't align to the agenda of the bourgeoisie and whatnot. If they can be blocked, then who can determine who should have a voice and who shouldn't have a voice? Do you know what I mean? I think people, adults particularly, need to just be responsible for what you listen and actually fact checking things yourself. So if you read something, don't just automatically think it's real. Like everything I've said on this video about stocks, don't just automatically think that what I'm saying is facts. Like, really and truly, adults have a brain, and it should be incumbent on you to go and actually verify any information that actually comes for you. I don't blindly read something and just think, yeah, that's true. I try as much as possible to validate it or to dispute it where I think it's applicable, where I'm going to have to make a decision based off that. And I think, all adults should be responsible. So I think Trump should be able to say whatever he wants. Listen, he became president from saying a whole bunch of madness, and he became president off the back of it. So stopping him saying certain things now is pointless in my eyes. Maybe because of the next election you think that this is the way to go, but I think there's going to be a broader systemic issue if we start allowing companies to block what people say, and start censoring what people say. Because if you do think about it in a different context, imagine if you was on a telephone call or a WhatsApp message with someone, and just because you said something, the WhatsApp message didn't go through. Like, it can get stickier. Do you know what I mean? So me personally, I actually agree with this. But anyway, if I put it back to the whole stock market situation, any of you currently holding Facebook or currently holding Twitter, I would definitely say keep an eye on this, because this is just the start of it. So, it's obviously dropped 5.06% this week, but if you just think about it, there's going to be a lot of lawsuits that's going to ensue off the back of this over the next couple of weeks. Then potentially legislation is going to be passed. So if there's any headlines around legislation being passed in order to, stop Twitter doing certain things, then that might have a negative impact. I think as well there's probably agreement on both sides, so both Republicans and Democrats agreeing to this as well, and so it's going to apply a lot of pressure on these stocks. Definitely going to apply a lot of pressure. So they're one to watch. I don't think it's just going to be downhill all the way. That's not what I'm saying, but I am saying definitely just pay attention if you hold these stocks already, and if you don't, actually seeing how the situation go might provide a little bit of a buying opportunity. So it actually might be a good thing for you if you was to, thinking, I wanted to get into Facebook and maybe wait for this to play out, and then that's an opportunity. The last thing is that Freetrade have announced a lot new stocks. You can see so many new stocks have basically been added on the Freetrade platform here. You can see new US stocks, so definitely go and check it out. There's a lot more stocks that have basically been added to the platform. Now I've got a lot of work to do to kind of analyze some of these stocks and work out which ones I like. Some of them I like as businesses, like Eventbrite, but that doesn't mean that I might necessarily like it as a stock performance. DocuSign, it's definitely a good business as well. There's loads of businesses here. There's loads of US stocks that have been added, which I think is going to have a really, really positive impact. But I have added some to my watch list, ones that I've spoken about over 9 months ago. So Splunk has been added to my watch list. I think it's one of the weirdest names for a firm, but I love it slightly. So Splunk, the Trade Desk, ServiceNow, Cloudflare, Virgin Galactic. So I've added all of those to my watch list. Again, just to be clear, when I'm adding something to my watch list, it means that I've got more analysis to do on it, more in-depth analysis before I decide whether or not they are buying opportunities. But you guys know that I am transitioning into more of a growth investor, with obviously some dividends, but I don't think that's going to be the main focus. I'm going to be trying to grow my portfolio and earn as much as I possibly can, and also stick to industries that I know more about, and I strongly know more about finance and technology specifically. So I'm definitely trying to transition into a bit more of a technology stock basis. So Splunk is a company that I've worked with, I'd probably say like 8 years ago. So I knew about it a very, very long time ago. And yeah, I just feel that I'm going to do some more research on it now, just as an investment opportunity, because to be honest, it was on my watch list 9 months ago, my offline watch list, and obviously Freetrade didn't have this on the platform. So 9 months is a long time to change the business. Maybe it's actually overpriced right now. Maybe it'll be too late to potentially invest. So it was on my watch list like around here, around $99 mark. Do you know what I mean? No, it's 2018. Let me be correct. It was around $110 mark. So not that difference. It's now 186. So potentially, I'm getting it at too high a valuation, too high a price. So it's something I'm going to definitely look into. But if you go back and check some of the previous videos, 17 growth stocks I'm watching and a few other stuff, I would have mentioned Splunk. The Trade Desk, ServiceNow, Cloudflare, Virgin Galactic. Again, all businesses that, I'm familiar with in some way, shape or form. And ones that I would genuinely believe in the long term. But again, it's just trying to understand whether they're too high at this current valuations, and do I need to wait for it to kind of maybe retrace a little bit before I invest. But it's a great opportunity. Freetrade has launched 250 stocks, so it's good to see there's going to be loads of opportunities there. So I encourage you all to have a look at them and see what's going to pique your interest, and see where you can add or shape or move around within your current portfolio as well. And I will definitely be doing some videos about some of the new stocks that's added. Obviously, I don't want to talk about 250 stocks. I just think it's going to be boring and mundane. But I might pick a few, or I might, do a series. I don't know. I'm going to work out what's the best way to do it in a sustainable way, and I'll definitely pick that up and let you guys know when that's about. But yeah, that's all I wanted to talk about today. Been a bit of a mad week in the market. Been a very, very mad week, just looking at the graph overall. But overall I'm up, which is good. So I'm sitting at 2.58%. I think it was at 3.88 by this point, when it was like 32,655, but it's dropped down to 32,082. But it's all good, and we should see what happens next week. Hope you found the video useful. If you did, like, comment, subscribe, and I will catch you next week with more investment videos to come. Take care, guys. Peace.